Good morning, good evening, good afternoon, wherever you are in the world. This is John with Tommy's Top Picks here to bring you your weekly flesh and blood market update. We got some news. Yeah, it's a weird week. It's a cool week. It's a happy week. I'm happy for it. Things are moving up. Now, the real question is how real is that? And I don't think we'll know for a couple of weeks. Just because we just had the TCG player Black Friday, and of course this data is all from TCG player, so it's highly biased to its own sales and things like that. So I think some of this is a result of that. I think another part of it is a result of the spoilers we got over the weekend, and maybe last week. I don't remember exactly the dates they dropped, but you saw them, I'm sure, the Arachnes and whatnot. And there is also a tasty little rumor which we'll talk about that I'm curious what you guys think about and if it's real and if it's not and that sort of thing. But before we jump into all that, let's just jump right into the numbers. Oh, sorry. One last thing. Quick announcement. This Sunday at 4 p.m. Eastern Standard Time, Tommy and I will be going live. Please join us for our live 100 episode of the podcast. Happy to answer questions. If you aren't able to make it, feel free to drop a question or comment in the comments below and let me know things you'd want us to talk about. It's probably going to be very much like our rambling podcasts, whether people show up or not. We'll just ramble on the topics you guys choose. And so it should be a good time celebrating 100 episodes of the podcast, which is pretty cool. I feel like that's a pretty big deal that we've been doing it so long. I think Tommy's still a little under the weather, so we'll see how much he can bring to it and if he'll be okay and how long we can go. But we'll be on there, so please, if you can, jump on and join us. We'd love to chat with you guys live because, we know you're out there. We know you listen. We know you watch the comments. We see the stats for YouTube. So really appreciate that you guys have been participating for so long. And this is a celebration of you as much as us. So I just wanted to throw that out there. All right, let's jump into the numbers. All right. Nothing at all in the unlimited world. It literally just did not move. So we're just going to go straight down to first edition boxes. Tales of Aria jumped back up to $69, 15.94% jump. I think that's the biggest jump we've seen in some time. Only thing I can think of is like when Arc jumped up. That was like a 20 or 30%. But other than that, this is anomalous. We've talked about how unreal this data is. This is a real data, 15.94% jump. That's pretty impressive. And of all things, it's Tales of Aria. Anyone have a clue? Because Icelander just LL'd, so what? Why did Tails jump? I don't get it. Only thing I can think of is it was a very nice price, but we've been at that price before. Now we do tend to jump up. If you look at this history, 58, 57, 57, and then we jump back to 61, right? So maybe it's a similar thing. There's no way we're out of supply of Tales of Aria first edition boxes. I mean, I suppose it's possible. That will happen eventually, but there was a lot of boxes. I just don't see that. So I don't know. I'm not sure what this one is. If you know, leave a comment. If you have an idea, maybe there's something in the meta I'm missing or something in those boxes that is like a talented, non-elemental thing. I don't know what would be in those boxes that would be driving this. Who knows? Anyways, moving on, scroll on down to Dusk Till Dawn. Now we'll talk about the rumor. It jumped 10.67% to 75 from 67. This is really a reversion to the mean, but I do think it's driven at least partially by a rumor floating around out there that somebody has received a spoiler that they will be spoiling soon. So it's got to be, I don't know what the spoiler schedule is. You can see it on FAB TCG. No, I'm sorry. Was it FabRec? FabRec has it, and oh my God, what's the card? February. Thank you, February. There's a tab with the spoiler schedule, so take a look at that. Somebody is coming up with a spoiler fairly soon because they have it in hand. That is a Prism card that apparently makes her playable. So those angels are gonna be interesting, I think, and I'm curious to see how that plays out, and we'll talk about it a little bit more when we go through some cards. I do have some cards today to talk about. So pretty interesting. Again, it is really a reversion to the mean as far as the actual market movement is, but I'm interested to see if this continues. And plus, you can't discount a 10% jump. That's a 10% jump, right? That's awesome positive news, especially for a set that's so recent. We don't usually see these kinds of jumps that early. in the cycle, right? Usually they dip, they stay low, and then they jump kind of after the third boring set. You know what I mean? And they don't even jump that much at that point. Usually they drag around in the bottom for a while. We'll look at the charts, but that's definitely something interesting to see. On the negative side ish, not really. Evo boxes are down 6.15% to 65 from 69. This is not that big a deal. It is just out. Everyone's getting bored of it. You know, we've drafted enough times, etc. So this is very normal. This happens. Okay, so it's doing the regular fall off period as we're kind of getting towards the beginning of the hype of the next cycle. By the way, shout out LSS. Good timing on their press releases, on their info releases and such, because it's not press releases, whatever, you know what I mean, the spoilers and the various things that they've talked about publicly, because it seems like they're getting their timing down to a science. Just as things start to get a little quiet, a little slow, we have these quiet weeks that we were talking about where there's like nothing is happening. You know, look at this, like nothing for about a month. We had a pretty quiet period with one exception here. We had some stuff happening, but it wasn't good news. It was down, right? You know, we had this quiet month, and then boom, they hit us with a bunch of stuff, right? I think the spoilers are a huge factor. We obviously had the end of worlds having an impact, and then we have the holiday buying season. All those things came together in a very good, a well-timed, or I hope it was orchestrated, maybe it was by accident, but I think it was orchestrated, timing for the market, very positive, very good, and as you can see, it's impacting prices in a positive way, which we haven't had this much heat in a while. Like, look at that. Well, hold on, I'll scroll down. Yeah, look at this. We actually have, like, heat. I mean, when was the last time we had 5 red bars? Here. Yeah, August, right? So I like it. I think it's a good timing. I hope it was engineered. I believe it was engineered because they're sharp and they've been definitely getting better cycle by cycle, like box by box, watching this progress. It's very fun to watch LSS develop as a company. As someone who deals with companies and analyzes companies on a regular for my day-to-day, they're fun to watch. They're very cool. I really enjoy it. I've seen a lot of companies fail. I've watched a lot of companies make mistakes as part of the biz for me. It's like 9 out of 10 companies will fail that get investment. So that's just normal, par for the course, standard day-to-day work. Watching LSS develop is inspiring and fun. It's really cool. So they should take a bit of pride in that. I hope they are taking pride in that, and those that are out there helping each cycle make a little bit better, a little bit stronger, a little bit more attention, you know, that sort of thing. They're doing their job, they're doing it right, and they're taking the right steps, in my opinion. So anyways, moving on down to the cases. Everfest jumped 7.87% to 216. I really do think this is reversion to the mean / super discount. We talked about this last week, how low that was. Very low price for a case. It jumped back up. Everfest, does it have anything in it that everyone likes? Probably for the new meta, right? Because we just shifted meta, and Everfest has this tendency to have IMs that were useful across the board, basically. It was a value pack, if you will. So there's probably stuff that people have forgotten about that were sleepers for a while, and now they've jumped in value with the FI win and the meta shift with Icelander out, right? I think there's going to be an interesting shift in meta. Speaking of, there is an invitational this weekend. I don't know if they're going to be streaming it or any of the real details, but I do know it was an invitational. I think it's in DC or Baltimore, one of the two. And no one knows exactly what the meta is from what I'm hearing. And this is just rumor, you know, take it with a giant grain of salt. Everyone's like thinking of different things, trying to adjust, see what the meta is going to look like, because we're in a different world now without Icelander and without Lexi. It's just a different thing. And then the FI Worlds win, you know, it shifts everything up. Everyone's trying to figure out what it looks like. Very excited to hear what that meta looks like. But needless to say, I think the shakeup in meta just is a positive for Everfest because, like I said, those IMs tend to be a value of use. They're very, I think that was the last power pump, if you think about it. This was the last time they, like, basically gave a ton of classes good cards. You know, nowadays they give some classes good cards and some classes are kind of medium, par for the course sort of stuff. If you think of like the tomes for the assassin / rangers, that was like their set, right? And then everyone else that had a card in there was kind of muted, right? It wasn't super big. Some of them were like downright bad. I think one of the guardian cards was, or something like that. So if you think about it, I think Everfest was the last time they were like, pump them all. Everyone gets a card. You get a card, you get a card, and you get a card. Pretty exciting times. And point being that this continues to drive revisiting of this, and we do see it time and again with these jumps, leaks down, jump, leak down. And I still think the overall trend is downward. We still have no word on the unlimited release. I hope. Well, I think at this point we can probably count it as is not happening until maybe cards run out. Now, the interesting thing about having that backup warehouse with unlimited, wherever the heck that is, if they still have it, is that if this ever runs out and these staples are still the power pieces, like whenever that happens, and this is a real question, like the timing of it all. If we get power creep before then this isn't a valid theory. But if they maintain this kind of relatively neutral status where they pump up weaker heroes but keep everyone else kind of flat and neutral as much as they can, which I think is a good play, because power creep's a killer for games, and if you've studied TCG history at all. This Everfest Unlimited being dropped on the market when this runs out and this price starts to go bananas, it might actually be a really good thing that they have it. I don't know. Like it's I've always dreaded it up until just this moment where I'm thinking about this and I'm like, oh, that could be something worth having in the back pocket if it's still a powerful set, because it does seem to get like a pump every time the meta shifts, new heroes are becoming prominent because there's cards for everyone in there. It's not entirely true. Assassin's not in there, for example, but you get the idea that it's a generally useful set. Anyways, moving on, Dynasty is up 5.33% to 319 from 302. I don't really have words for this. No, Dynasty, maybe Fi, probably Fi. It's probably Fi. I bet Fi is driving boxes, worlds and Fi. Yeah, actually that makes a lot of sense. And then of course Dust Till Dawn's the same thing, right? Up 8.66% to 314. Again, unusual for a set that's so recent to get a pump like this. This is great, love it. It's not a reversion to the mean. It's well above the last 3 months price. I do suspect this will draw back down a little bit, depending on that leak again. So we have meta leak and hype. So the leak is that, the angels there's no word about the angels, actually. It's that the prism becomes functional. So I don't know what to really think about that. It's a rumor. We won't know until that card's out, but it is impacting prices, as we'll see in a second. Let's go ahead and jump over to that. So I just pulled up a few of the angels and such that I thought were interesting. Over Black Friday, this essentially had a buyout. This is, I think, one of the useful ones. So it went from, call it 70s up to 110, but it's now drifting back down already, right? So this is the Marvels. Obviously, players are probably going to target the regulars, not the Marvels, but I like to follow the Marvels, and I feel like the collectors react to the market more drastically than the players, and that ends up being easier to spot in the market data, right? So here's that Figment of Rebirth starting to drip back down again. I think this is one of the big playables. I love this art. It's fantastic. Like, it's gorgeous. I just love the style. I haven't picked up my angels yet, and I don't know if I'm going to miss the boat and this rumor's going to happen and all these are going to fly out. And the reason I say that is because the big player, this is the one everyone runs, is really expensive, and it had a buyout, basically same thing, right? 80s all the way up to 130-ish, 35, and there's only 4 left on the market. I may miss this. I'm not really committed to them. I do love the angels and the art. It's really hard to justify it. I have other things going on financially right now. Not bad things, just busy and working towards other goals. So getting these right now is not my top priority financially. And as I always say for everyone, this is a great thing to do. There's ways to make money on it. It is valuable. It is fun. But take care of your other business first, right? Make sure you're committing 100% match to your 401k, 403b, whatever you have, retirement accounts, IRAs, whatever you have. Get as much as you can a year, get up to that maximum. Make sure you get property set up if you can. Owning property helps a lot with other financial things. Make sure you're taking care of all your debts and things like that first, and then as a last step, you get into cards with your money, right? From a speculation and financial standpoint, at least, because it's a high risk, high volatility asset. We're talking going to zero is real. Most stock, that's not real. And it's a thing you have to consider as a last money that you're willing to lose sort of bet. That's how I look at it, as an alternative asset that's extreme risk, extreme volatility, and you can make money on it. I've made money on it. It's been good, but you can also lose all your money on it. Point being that I really do think it's the last bit of money to go into something, and honestly, at this point, I have other higher priorities in my financial stack, if you will, that are there. So I'm not gonna buy the Angels. I have a feeling in 2 years I'm going to punch myself in the face for this decision. I really do think that's where we're at. So I don't know. Take that with what you will, but point being, make sure your financial house is in order before you go spending money on cards, especially like collectible investing style spending. I mean, obviously, if you're spending it for entertainment and play value, and you have an entertainment budget, that's a different story. But this is not entertainment. I don't need a $140 single card to be entertained by this game, right? That's just not how this works. So. Last one I wanted to point out is Icelander. She has LL'd my poor sweet baby. This has been my favorite deck, art, etc. for a long, long time. And she LL'd finally, and this finally dropped below 80. For the longest time, this thing held up forever. It was, and this is that full art one. Unfortunately, it's the what's it called, the young version. So it's the only full art. I wish they did a full art adult. I would have liked that, but they never did. Point being, finally fell off after a long time holding at 80. I mean, it just has, it never came down. Let's see if we have a chart that shows it. Yeah, it really did. It just held out at 80 for a long time, and now it's down. Not surprising. LL'd. She'll come back someday, or she'll be a menace in LL. I don't know. I guess we'll see how that plays out. But anyways, one piece of news I wanted to jump into before the charts. Just got word today. The Fed came out with statements. I can't remember what governor it was, Wiley or Willer or something like that. Made a statement that was interesting. Basically, and I'm not quoting this correctly, so look it up if you want to look at the details. But essentially, that if inflation continues to decline at the pace it's declining, then there's no reason to maintain a high interest rate environment, right? And that makes sense. That fits the Fed's mission, goals, and system. The goal is to keep inflation at around 2% and employment at maximum. And maximum, I think, is 3% unemployment. That's the number they target. I could be wrong on that, but that's generally historically where they've been. I think that's right. Maybe it's 5%. I can't remember. Whatever it is, the point is they're trying to keep as much employment as possible and keeping inflation at only 2%. That is the goal. Again, somewhat arbitrary numbers. There's a lot of discussion about how arbitrary they are, where those numbers came from, etc. You can find that online. I would suggest it if you're interested in this stuff. But point being, when the Fed says something, they know it's going to impact markets, right? So they're very careful in what they say and how they say it. Like, very careful. It's ridiculous, like, how careful they are. So when they say something like that, which is a different statement than they've said, higher for longer, right? Up until now, that's what they've said. That is a signal to the market that, yes, we are anticipating sometime shortly. Is it 6 months? Is it 2 months? Is it tomorrow? We don't know the answer to that. But sometime shortly, we're going to start adjusting our approach and reducing our interest rate. And the suspicion, and I fully believe this, is that interest rates will begin to drop within the first half of next year. Excuse me, not by much. We're talking quarter basis point type thing every quarter. So I don't know what the Fed rate is right now. I think it's like 5.7, 5.5, something like that, maybe 5.5. If it's 5.5, then that means it'll be 5.25, right? And then that's it for January through March, right? Something like that. I'm making up numbers and timing, but you get the idea, right? And then the next one will be, 5%, right? So it's a very slow thing. It's very slow. But when the Fed pivots, it changes the dynamic of the markets and things start to adjust. You see asset prices rise into this time frame, like the first signaling to the actual change. You see asset prices rise. So in assets, if you think about it, they're not equities. They are you see I don't want to get into the details because it's complex, confusing, and if I don't do a good job explaining it, I will mislead you, and I don't want to do that. So asset prices rise, says things you can invest in rise up until the point that the signal happens. Typically the change in interest rate occurs, and when that happens, these things decline. Now, part of that decline is because unemployment usually hits. You reduce the interest rate to help combat unemployment. That's part of the way the whole thing works. Now, they might reduce it if employment is still okay and inflation is down. You don't need to have that at that same height. You can reduce it slowly and get it down to kind of a break-even point between the supply and demand of money, basically. And what is happening and what we're seeing is that we're going to see until this turn that a lot of asset prices will rise, but after that they will probably decline because they will probably decline on negative news, i.e. the timing is all tied together. Unemployment starts to go up, which we are starting to see. Some of the leading indicators on unemployment show. I've talked about that before, and essentially, basically, I think it's continuing jobless claims, I think, is one of them, and the other one is positions available. So there's a couple ways to track unemployment. One of them is how many unfilled jobs there are. And the unfilled jobs used to be high, right? Meaning anyone could get a job pretty easily because there's a lot of open positions. Well, that is decreasing. Companies are cutting back on those new positions, right? So that's step one. Step two is unemployment starts to go up, and continuing unemployment is another factor. The first time is one thing, continuing is another. It means they tried to get a job and couldn't get a job, right? Unemployment, that suddenly someone has a new job the next week, not a big deal, right? That happens, right? That's just cycling people into new jobs. It's the continued unemployment. People are unemployed and try to find a job and can't. That's where you start to see the impacts on the economy, demand, all these other things. Another piece of data that came out is CPI is coming down again, or still. I think we talked about this last week. The breakdown is it's primarily housing. So I think it's 3% CPI, which is not exactly inflation, but it's an inflationary number. And it's consumer price index, if you want to know what it means. Housing is like 2.5 or 2.3% of the 3%. So most of it is housing prices inflation. And what you're seeing is it's starting to come down. Now, I will be honest, the housing market peaked in October of 2022. It has been coming down for a while, but the decline on housing is one of the stickiest prices. That's what I'm trying to get to. So seeing that large a chunk of CPI being housing, right, over that target, that 2% kind of target, is a big deal, and is going to be hard to rectify, because one of the ways you handle something like that, inflation in a market, is to produce more of it, right? So it's available and then the prices come down. You can't really produce more housing, not easily. There's a lot of restrictions, limitations. So the supply on housing is sticky. The demand is basically demographical. So it's basically as generations age to certain ages where they can afford things, all this stuff. You have a boomer kind of retirement and death happening slowly, right? So that wave of house ownership is slowly shifting to that next generation, and we're getting this crossover period. And what's happening is there's a lot less supply than we need. Demand is still high. Demand has been high for years, but the prices are starting to come down because of interest rates. What happens when the Fed, who is not responsible for the housing market, reduces interest because inflation is down, right? Say the prices drop a little bit, say consumer prices, because that's the other thing. Food and beverage is the other main factor. I think it's 0.5% or something like that, maybe a little bit less, 0.4 or something. So when that shrinks back down to very reasonable levels and housing declines a little bit, you start to get in that target range. The Fed reduces interest rates. Guess what happens? Housing inflation happens again because the demand is so high and the supply can't be adjusted very well. So when housing inflation starts happening again because the interest rates become bearable, which I think it doesn't take much. I think I saw a survey, something like a 5% interest rate on a mortgage is suddenly sparks demand again. When that happens, you got to take the Fed rate and combine it with a bank rate, right? So you end up with I think right now average mortgages are 6 or 7%, something like that. You can look it up; it's out there. But when it hits that like 5% mark, demand spikes, prices spike. We go back to that cycle of high, expensive, hard to find houses, quick turnover, that whole thing. And that changes the dynamic again for the inflation situation. So the worry I have personally, and this is just me talking, is that we reduce interest rates, or the Fed reduces interest rates in alignment with their mission, in alignment with the inflation targets and everything that's happening. And what it does is it basically sparks off another inflationary period, primarily driven by housing. And we'll have to see if this plays out. This is a guess by me. I don't have a lot of data to back this up. And when that happens, we end up going back into a hawkish environment where they put rates up again. And we end up in that stagflation I talked about maybe a year ago. We end up in this cycle. I think it was 67, maybe 73. I can't remember. There was a cycle like this where it happened before. They basically cut too early, and it dragged out forever. It took forever for the economy to get back into a place that was good. We had a decade of basically flat growth. I don't think we'll have it that bad. We have a lot better information now. There's a lot of other things that have changed since then. But it would be a bad thing overall if we ended up in a flat decade sort of thing as a result of this. So we'll see how it goes. But the fact that they're kind of hinting they might reduce it means we're heading towards that path. They're tricky markets to navigate. Usually in a up market and down market, there's easy ways to make money, easy ways to protect your assets. In a flat market, it chops, it goes up and down, and you get chopped up. You're bullish, you get chopped up. You're bearish, you get chopped up. You can't choose correctly. It's very hard to predict. It's very volatile usually, and it's a tough place to try to preserve wealth. So anyways, as we see more of those economic factors come into play, I will talk about them more, but just want to lay that out there because I know some of you like me ranting about economics. So let's jump in. Let's see. We'll target this. So we'll go to first editions. Nothing in unlimited worth looking at. What do we want to see? Ellie, Dust Till Dawn, Evo, maybe Everfest. Yeah, let's just go through first. Oops. Let's see, where are we? Start here. Ellie. Oh, yeah. Look at that spike. Look at that spike. Man. Wow. That's a $12 differential there. Look at that. You can buy a case and make $12 for each box. I don't think that's true. Like I said, I think this will come back down to the mean. I don't know why this spiked. Please let me know in the comments if you know why Tales of Aria spiked. Whatever. Always a fun one, Tales. Everfest, yeah, this is a jump up. Now we did see it. Yeah, this looks like the classic bounce off of a support line. This was a ridiculously low price. Now it is a little high. So do we average back down? I think we do. Premium is coming back. Now we'll say historically we've been about 50-50 premium and not premium, kind of in parity. This is too high a jump for its historic positioning, so I do expect it to come back based on the data here, or maybe the box prices to rise. That is also a possibility, though we don't tend to see that, I don't think. Uprising, there's nothing really special there, although I'm a little surprised with Phi. You'd think he would be, maybe he doesn't have heat in Uprising as much as some of the other sets. I don't know. You'd think that would go a little crazier, right? Maybe it's not good. Dynasty. Good God, what the Well, okay, so our first 2.0 premium reversal here. Yeah, we'll have to look at this. Let me go back to Uprising real quick. I want to look at that. So we did have a premium reversal here, but it's on the downtrend. It's the price of the box met the where this is the case. Interesting. I do not know. This may be a Phi thing. I don't know. This is interesting. I'm not sure what to think about that yet. We'll have to watch the data play out and see how it goes. 2.0 is an interesting little experiment. I'm very curious to see how it plays out in the long term. Outsiders, yeah, this one's been back and forth reversals. We're just seeing it kind of revert to the mean. We got the nice curve. I do like to buy at these sorts of levels because it does usually tend to be on a way towards an upswing, but 2.0 is a little bit of a weird thing. Dust Till Dawn, yeah, this is rumored demand. Both of them jumped simultaneously, so boxes and cases went off the shelves. Pretty cool. And then Evo, yeah, still going down, but we did see that. Yeah, okay, cool. Anyways, I hope you enjoyed the content. Leave a comment, like I said, for this live cast thing. If you can't make it, let me know what you want to hear us talk about. We'll ramble about it for a while, I'm sure. And anything else out there that's interesting to point out in the market dynamics. Very clearly interesting times. I'm very excited to see this next phase of Flesh and Blood's development. They're a lot of fun to watch as a company. Until next time, I hope you're out there cracking packs, playing games, and enjoying this hobby that we love. Have a good one.